The market is sending completely mixed signals. On one hand, you have massive long-term bullish bets being placed. We're talking $1 million options trades that don't expire until 2026. On the other hand, a government shutdown is blinding us, earnings are a total coin flip, and some of the biggest names in tech are getting hammered after hours. So who's lying, the bulls or the bears? We're going to follow money, find out, and stick around because I'm going to share a trade setup in a sector that is quietly becoming the new AI darling. It has nothing to do with chips. Let's get into it. This week is all about navigating a data fog. The government shutdown has delayed key reports, so every piece of data we do get hits the market like a lightning bolt. At 8:30 a.m. today, we got initial jobless claims. Consensus is 223K. If the number jumps, it's the first crack in the jobs armor the Fed has been waiting for. 10 a.m. we got existing home sales. The market expects 4.1 million. A big miss here could spook investors about consumer health. But the real boss level for this week is the delayed September CPI report. It's expected Friday. A hot inflation number will almost certainly paint the week red. A cold number would ignite a face-ripping rally into the weekend. This one report will decide everything. Geopolitically, keep an eye on any headlines coming out of China. We've already seen selling pressure on China-related equities due to regulatory fears. Don't expect that to just disappear. Thursday is expected to be Chop City. With no major macro driver outside of the housing data, the market will be a battlefield of individual stock stories. Leadership is rotating fast, tech is still strong, but financial and industrial saw some life earlier this week. The real tell will be how the market reacts to earning misses. Does the whole sector get dragged down, or is the weakness contained? Friday is simple. It's all about CPI. Valuations are stretched. The hot inflation print gives bears all the ammo they need. The theme for earnings has been brutal, honestly. Netflix smashed revenue expectations but missed on profits because of a tax issue in Brazil. The stock got annihilated, dropping 7.6 after hours. The market is in a show me the money mood. Great story, better revenue, but if you can't turn a profit, you're getting punished. Dark pool prints are quiet, but the option market is screaming. Let's look at Tesla. Tesla dropped 4.8% after hours yesterday. They reported record sales, but profits plunged. The market is worried about margins, but here where it gets really weird. Someone just played a massive bullish bet on 600 calls expiring in September 2026. That's a long-term believer in Tesla fighting the short-term panic. Now we come to my fade list. The signal is crystal clear. Semiconductors, Texas Instruments got wrecked and poor guidance, and the whole sector is weak. Smart money is also avoiding China-sensitive tech stocks. The VIX is creeping up, and the put-call ratio is at an elevated 1.29. Everybody's buying protection. The mood is fearful. Quick updates on my trades. I closed IWM 249 calls for Monday and Tuesday for a small profit. I'm selling my SPY 658 puts. I bought at 0.73, so $73 this morning at the open to lock that in. Now for the new idea I teased about, everyone is chasing Nvidia. As you guys know, I'm looking somewhere else. The real AI story that's being underpriced is power demand. Data centers are energy hogs. That's why utilities have quietly become the S&P 500's third best performing sector. The trade is the utility select sector XLU Catalyst. This is a non-traditional growth play on the AI boom. As data centers scale, their power consumption will explode. Wall Street is just starting to connect the dots. The setup, the chart is showing incredible relative strength breaking out while the broader market chops. It's a clean trend. I'm looking to enter around current levels with the stop below the recent consolidation and target that gives it room to run. This is a momentum play backed by a solid fundamental story that the herd hasn't fully caught onto yet. So here's the bottom line for the rest of the week. The market is caught between short-term fear and long-term greed. Earnings are a minefield, and Friday's CPI report is the final boss. Watch for weakness in semis and don't get caught on the wrong side of a headline out of China, and keep an eye on the utility sector. It might be the smartest boring trade of the year. Drop a comment, tell me what you're trading, hit subscribe, hit like if you want more no BS breakdowns like this. Stay sharp.